In this video, I'm going to cover for you very quickly on some of the budget updates from the Chancellor in terms of what it means for property investors. The spring budget on the 3rd of March 2021, I think brought some good news overall for property investors. Capital gains was expected to increase. It didn't. The stamp duty holiday was extended to the end of June, which is good news. And previously, it was thought that entrepreneurs relief may change once again from the year before and may be totally abolished, and that capital gains tax would increase, but it stayed at 28% and 18% respectively for residential property gains, and 10% and 20% for non-residential gains, which is good news. They might change it in the future at some point, but at the moment it's that good news for property investors. The capital gains tax annual exemption has been frozen at 12,300 up until 2026. That isn't that much good news because obviously with inflation, the value of the 12,300 will be diminished over the next 5 odd years. And then looking at the fact that property prices increase higher than inflation, then there's going to be bigger gains. So that's the first thing. Income tax. As expected, the rates of income tax and national insurance have been held steady for 2021-2022. The Welsh and Scottish parliaments, as you know or you may know, set their own rates of income tax, so they obviously do things based on their own devolved authority. What will change is the income base the rates apply to, which are the tax bands. So the 40% in England and Wales and Northern Ireland will start at 50,270, and Scottish taxpayers at 41% income above £43,663. These thresholds both include the personal allowance set at £12,570 for 2021-22 tax year. The personal allowance will be frozen at that level until the 6th of April 2026, as will the 40% threshold. This means that more people will have income taxed at 40% as their increase in future years, even if that increase is only in line with inflation. The personal allowance is withdrawn by £1 for every £2 once your income goes over £100,000, and that threshold has never been changed since it was first introduced in 2010. This means that you end up paying marginal income tax rates of 60%, and in Scotland 61% on the income tax band between £100,000 to £125,140. Then you've got the additional rate, which is the 45% and 46% in Scotland once you go over £150,000 in any given tax year, and this is again a fixed threshold. However, Scottish taxpayers are going to benefit from a lower rate of 19% on the first £2,097 of taxable income, so that's good news for them. Property companies. So if you hold property in a limited company and you make gains, then you're subject to corporation tax at 19%. However, from the 1st of April 2023, this is going to change as the main rate of corporation tax is going to be increased to 25%. The Chancellor said that companies with profits including gains not exceeding 50,000 are still going to pay the corporation tax rate of 19% from 2023, but he didn't spell out the complex tapering of tax rates which will apply to profits between £50,000 to £250,000. From 2023, it's going to be really important that you plan the timing of your property disposals, if you make any, for capital gains tax purposes, because you don't want to bunch them all in one particular year. Stamp duty. So the stamp duty land tax holiday on purchases of residential property in England and Northern Ireland was due to end on the 31st of March this year, but it's been extended to the 30th of June 2021. What's more, the lower rate threshold of STLT won't return to its normal level of 125,000 until the 1st of October, which is good news. But you'll still have to pay the additional 3% for your second or additional property, but that's always been the case anyhow, whether you buy property individually or through a limited company. Then we've got ATED, the annual tax on envelope dwellings. This is when you buy residential property in a limited company and it isn't rented out on a commercial basis, and it's quite nasty. So the amount of ATED you'll have to pay has increased. I'm not going to run you through every single figure. So by way of example, property between £500,001 all the way up to £1 million for 2021-22, you'll have to pay £3,700 in tax every single year, and that figure goes up once your property is over £20 million in value. You have to pay $237,400 in ATED every single year. There are some kind of exemptions for people who don't pay, but if you're letting out to a third party at commercial rent, then ATED doesn't apply to you alongside some of the exemptions, which I'm not going to cover here today. Then we've got that super deduction for capital allowances, which is very good going, by the way, and it gives you a 30% uplift in terms of you can claim up to 130% for new equipment. But this includes vans, which is good news for those property investors who have vans but not cars. And then you've got 50% for integral features, which basically, to keep it really simple, means you can write off a bigger cost in the first year. And then you have the annual investment allowance. This basically enables you to write off up to £1 million of capital expenditure in one particular year, and it's been extended for a year previously. However, the AIA, the annual investment allowance, will be reduced back to £200,000 from the 1st of Jan 2022. So we've still got best part of 9 or 10 months to make use of that, but then it's coming down. But this super deduction is good. It's available for assets purchased between the 1st of April 2021 and the 31st of March 2023. So if you're looking to buy an asset which qualifies for this super deduction, don't buy it in March, buy it after 1st of April, so that you get the additional 30% if you're buying equipment. So this is really good news, and it's going to work really well. What's important to remember is that this only applies to new fixtures, fittings and equipment, not second-hand, and also only available through limited companies and not unincorporated bodies. So sole traders partnerships will not get this super deduction. So that's kind of the thrust of what's available to property investors in this particular budget. Not that much, but you've got a bit on SDLT extension. Capital gains tax wasn't hit, so the Chancellor didn't hit property investors that hard in this particular budget, unlike some of the previous budgets over the last 5 or 6 years. So in that sense, good news.